Let's go to CommSec. Piotrowski joins us live for a look at the markets. How are we going to start off this new week? It's good to see you, by the way, Thomas. I've missed you. How are we going to start off the week?
Pete, good morning to you. I've missed you too. We've got the market looking like it's going to gain around 0.1% when we kick off later on this morning. Nothing to take one's breath away. And a slight outperformance considering US markets generally ended a little weaker on Friday. We had the Nasdaq down by around 0.4% and the S&P 500 down by around 0.2%. One of the points of conversation was the big fall in consumer sentiment last month in the US. It fell to a 6-month low. But then you look further into the numbers, Pete, and then consumer expectations of inflation down the track remain quite elevated at their highest levels since 2011, which went over poorly, as you might imagine, with the interest rate market. So we saw longer term interest rates push a little bit higher. So it'll be interesting to see how that story pans out over the course of this week. You've got a picture of moderating growth, elevated inflation, an unwelcome combination for the markets. And we'll get a little more colour on that this week because some of the features will include wages data locally on Wednesday and employment figures on Thursday, Pete. So quite an important week from that vantage point. And we could potentially even see a moderation in Chinese interest rates as early as today. Weaker economic news last week, including softer inflation numbers, could see the People's Bank of China cut the one-year lending rate today. So that could potentially be a little bit of a fillip for both the local market and regional markets.
All right, I don't mind a fillip here and there. All right, thank you, Thomas. We'll talk to you soon.